students, I welcome you all to the first part of the company law marathon, and today is the most important part as well. What I will be doing in today's part is I will make you memorize all the sections and all the chapter sections completely. This is my guarantee to you. You just have to invest 1.5 hours with me, 1.5 hours to 2 hours, and I guarantee you, you will get an immense amount of confidence in company law and you will memorize all the sections as well. Now, before I start, can you all hit the like button and share the link of this video in all your study groups as well, so we can reach to more students and more students can be helped in the process. Thank you so much, everyone. Now remember this thing, that this notes which I am teaching from is available on our JT website free resources section. Thousands of students have already joined it, and this thing is a single most document for company law which is enough to help you get an exemption. Now before I start, let me tell you that I am Professor Zubair Jahangir. I'm a company secretary and an advocate. Okay, and in this video I will be making you memorize all the sections of all the chapters in depth and telling you what comes in the exam and every aspect needed to get you an exemption. I know you must be a little scared, just because exams are on the corner, and a little bit nervous. Let me tell you that when I was also of your age, I had given both the groups, I cleared both the groups in one go, and the reason I did it was because I had written in the beginning of my book that I will clear with flying colors, I will get an exemption, and I want you to do the same. So what happens is, when you write before your every study book that I love this subject, I will become a master in this subject, and I will score an exemption, that is when it will show in your results as well. And one other simple rule I used to follow is I used to keep smiling, because with smiling I get confidence, my body feels that everything is going well, everything is under control, and only good things will happen. So these are some of the tips that I want to share to you, because it will make your student life and even professional life only easy. So before I start, can I have exemption in the chat box? All those students who want exemption in the in your executive level, write the word exemption. Okay, and these lectures will be in English, so that students from all over India, including my South India students, will be able to attend, learn and excel. And we are having this same session from our Andheri Mumbai center. So any of the students who are in Bombay, Mumbai, they can also come and learn free of cost. There is no charges. Clear? So Mahalakshmi, great, all set to get an exemption. What about others? Ready to get an exemption? This video is by far the most important video that you will be watching, because once I start, then I directly complete the syllabus. Ditya, great. Durai, great. Also ready to get an exemption. So I cleared both the groups with multiple exemptions, and I'm sure you all will get even better marks. Right? Chalo, let's begin. Now, these notes that I'm teaching you from, you will get it on our website. So it is advisable to download and keep it. And before the examination also, 1 hour, 2 hours before the examination, I want you to refer these notes as well. Second, very important, I want you to have a book and pen. Keep noting down whatever I will be teaching you. Okay, and then when you memorize after the marathon, you will memorize all of that. It should be perfect. Great. What about others? All set to go? Yes or no? Chalo, let's start. Hi, so we'll be starting with the company law exemption marathon. Now, what is the exemption marathon? This is enough to get you an exemption in your examination. Second, the exemption marathon notes are available on our free resources section on our website. Thousands of students have downloaded it. I advise you all to go ahead, download it, and even refer it one day before your examination. When I take you through this presentation, you will realize how important and useful it is. Now this entire marathon presentation is prepared by me, okay, and I had cleared both the groups in one go with multiple exemptions, and that's the objective for today as well. Okay. Now, before we understand to score good marks in any examination, it's very important to understand that what kind of questions will come and how do we tackle it. So the very first thing is, in your entire company law paper will be divided into three parts. Company law examination, your paper will be divided into drafting or in company law. So certain drafting portion will come. Sir, is that covered? Yes, I'm going to cover that also in today's marathon. Second, the sums. Now from where and which section the sums are covered, that is also covered in the examination marathon notes. And third, how to tackle situational questions. Okay. Now, when you go to see any situational questions or drafting, it all starts with writing and quoting the section numbers. Because if you know, and you've seen any of the how rankers write, they quote the section numbers. So I will be taking you through the entire company law sections, okay, and I want you to note them. Now first, when I go to see Company Law, Companies Act 2013, it starts with section number 1. Okay, now obviously section number 1 is always the title of the act. Title of the act means the name of the act, and the application of the act will be given to where all it applies. Now coming to the definitions. Now in definitions, what all you need to know. Now if you go to see the definitions I have covered is your associate. Okay, it is given in your section 2 subsection 6. Body corporate is given in section 2 subsection 11. Your books of account is covered in section 2 subsection 13, right? Now let's go to your module, okay, and I'll just open the module also in front of you, so it becomes easy. So in your module also you need to write against the chapter names all the sections to which it relates. Okay, so I want you all to open your module also. Just be with me. The marathon won't be for too long, but it will be very useful. Okay, so these are the chapters that are there for your examination. Okay, now these are the chapters for your examination, out of which recent amendment this has been deleted from your syllabus. Very simple, makes our life. Now let's understand which all section comes and what all range is covered in the section. Now first, when you go to see, okay, first let's write the range of the section. Section, like some of the sections are very hard hitting, you can directly say, like section 77 to section 87 talks about charges. Then section 123 to section 127 talks about distribution of profits, that is your dividend chapter. Then if I talk about your, okay, section with respect to, there are two things: debt instrument, that is debentures, and the other part they talk about is deposits. Okay, now debentures is covered under section 71. Okay, 71 is debentures, and deposits are covered under section 73 to 76. Now in your examination, I expect you to at least learn and write these range of sections if you don't remember the specific section. Okay, then when you come to let's say accounts and auditors. Now again, accounts is from section 128 to section 130. Your internal audit, it ends, that is your 137, 138. Now when you start about auditors section, okay, auditor starts from section 139 and goes on till section 140, right? So these are your, I think even more, 148 I would say, because 148 is your cost audit that they talk about, right? So is this clear? Yes or no? This range is clear. When you come to compromise and arrangement, it is your section 230 to section 240. Okay, this is there. Dormant company, which section? Section 455. 455 talks about dormant company. Concept clear? Yes or no? Once you write the section range, when any resolution comes with respect to that, any kind of situational question comes with respect to that, you should be able to attempt. Now further, when I talk about members and shareholders, there is one section which defines the members. Can anyone tell me what is that section which gives the definition of members? So if you go to see, these definitions will be seen section 2 subsection 55. Now see here, section 55. So when you go to the definition, you know that section 2 subsection 55 defines the term member. So section 2 subsection 55 defines the term member. Concept clear? Then when you go to see this provisions of share and share capital, obviously it is a really big particular chapter. So we will see when we do that particular thing, because there are multiple sections within that you need to know. If I still, okay, just make it a point, let's go and finish the sections for, let's say we'll do it from the the Bear Act. Okay, directly we are going from the Bear Act. Now when you go to the Bear Act and you look at the provisions with respect to now share and share capital, what are we looking at? Share and share capital. So section 43 to 72. So share and share capital also, I'll write it separately, okay, separately. But before I come to MOA, AOA, tell me what is the definition of MOA, AOA. So here we talk about definition of MOA, AOA, okay. So if you see, the definition of MOA is given in your section. AOA will come ahead only. I haven't given here. So AOA see 4 and 5. Okay, so section 4 and 5, this talks about section 4 and this talks about section 5. So the provisions are contained under section 4 and section 5. When we come to amendment of alteration of MOA, then it is your section 13. And when it comes to alteration of AOA, okay, alteration of AOA, it is in your section 14. So if anyone wants to alter the AOA of the article AOA, then they will follow the process given under section 14. If they want to alter the MOA, it is under section 13. Clear till here? Registered company, so all the definition of companies, whether it be foreign company, government company, all those are given in section 2, which you need to know. But in addition to that, I would also like to tell you that section 371, okay, 371. So what is 371? Let's go to it. Very, very important, okay. Now, winding up, and that is also important, and very important is foreign company. Now see the foreign company range. So companies incorporated, section 379 to 383 is foreign company. So right now just learn these sections. I believe all of you all should mandatorily know these sections. Mandatorily, it is a criminal act if you don't code these sections after I have taught you. Concept clear? Yes or no? Now even if I go to share capital now, even if I go in share capital, let's say share capital, Then which all are the important sections? I'll tell you from now only, I'll tell you that. Where this big huge section range is there, okay? Now in this, which are the important sections? So I'll tell you, section 54, okay? Then you come to, there is a sequence actually, that sequence I'll teach you. Section 52, okay, 52 to section 54, okay. Then you come to your section 68 to 70. Section 68 to 70 is about buyback. Okay, very important. Then one more provision I can tell you is very important is your section 42, that is private placement. Okay, this is about issue at premium, issue at discount, and issue of sweat equity. So this is in order. Okay, this is in order. It is at premium is section 52, discount is at 53, and sweat equity shares is at 54. Section 52, section 53, and section 54. Concept clear? Yes or no? All these mandatory sections I want you to quote in the examination, right? Yes or no? Yes. Now let's start with the in-depth section. Now what happens is, normally students don't quote the sections of definition clause. Now in the definition clause I will be telling you which is important, which you can learn. So definition clause now is section 2 subsection 6. What does it talk about? It talks about associate company. So what is an associate company? An associate company is where one company has a significant influence on the other company. Has a significant influence. See, has a significant influence, and when I say significant influence means they are holding at least 20% of the total share capital in the other company, but not a subsidiary. But it is not a subsidiary. So subsidiary is 51%, more than 50%. So it is 20 to 50% range. So 20% to 50% if a company is holding shares in other, it could be called as an associate of the other. Concept clear? Because if it gets 51 or more than 50, then we will say it becomes a subsidiary. So here we say that one company is controlling another company. Okay, so how you are controlling? By holding at least 20% and up to 50% shares. Body corporate is section 2 subsection 11. In examination sometimes they ask what is the difference between a company and a body corporate. What do they ask? What is the difference between, okay, what do they ask? What is the difference between a company and a body corporate? So a body corporate is a wider term. So this is a wider term, includes any entity which is registered under any act having separate legal existence. So this is given under section 2 subsection 11. And company definition. Now I believe all of you all are company secretaries, you are professionals, CA, CMA. So obviously you need to know the definition of company. Under which section you need to quote it? Section 2 subsection 20. Now company is any entity registered under Companies Act 2013 or any previous Companies Act is a company. A body corporate is anything which is registered under any act having separate legal existence. They've given few exclusions like cooperative society will not come. You know, those exceptions, anything which the central government has notified, that will not come. Apart from that, everything is a body corporate. So example of a body corporate are all companies will definitely are body corporates because they have separate legal existence. Even a foreign company will come here. Even a LLP will come here. Limited liability partnership. Right? Simple. Now again, when we come to section 2 subsection 13. Now this also I want you all to write it in your accounts chapter. See, here everybody would write, maybe at some category some students will write section 128 to 138. but very few students will write section 2 subsection 13. It gives you the definition of accounts. What does it give you? The definition of books of account. Now you've done from 12th, you've been making balance sheets, right? Balance sheets and books of account. So what all do you see in a book of accounts? So when I look at a book of accounts, I look at the trading account, the profit and loss account, the cash flow statement, the balance sheet, that is assets liability. This is exactly what will be meant by books of accounts. So all your assets liabilities in your sales purchases, okay, then items of cost and all sums received, okay, all sum received and expended by, so expenses, all those will be seen, debit credit. Then comes to the next thing. So section 2 subsection 13 I want everyone to learn and write, okay. Further, next important thing is section 2 subsection 16. Section 2 subsection 16. Now go here, back to charges. Now charges, many will write section 77 to section 87, but very few students will write even section 2 subsection 16. See, what is a charge? So obviously you need to give the definition. It's a chapter. The question can definitely come from your. So start off with even the definition section, section 2 subsection 16. What is a charge? A charge is basically any interest or lien created on the property of the company, whether movable or immovable, okay, any interest or lien created on the property of the assets, okay, and includes a mortgage. Simple. Section 2 subsection 20, we've done the definition of the term company. Then moving forward again, when I told you that you have a chapter called as debentures, so debenture is given in section number 71. But now we are also going to look at the definition section, and we're going to even write that. Now see, your debentures are given under section 71, the provision, and the definition is covered under section 2 subsection 30. What is it given under section 2 subsection 30? Sir, what do you mean by debenture? So debenture is a acknowledgement of debt that the company has taken from the debenture holder. In return, the company will keep paying interest like how they would do. It could be secured or unsecured debenture. Very simple. So debenture is a evidence of debt, okay, may have a charge or not. So it could be secured, unsecured, and it includes debentures, stock, bonds, anything whichever, wherever there is a debt. Very simple. Now I told you there is another chapter called as deposits also. There is a other chapter called as deposits. Now deposit also very simple. The very next section is about deposits. Okay, so if you go to see section 2 subsection 31. So here, if I look at section 2 subsection 31, it gives me the definition of deposits. Now, what is a deposit? So very interestingly, in the definition section, they don't define the definition. It gives you an inclusive definition. Deposit means any receipt of sum from by the company, includes any receipt of money, okay, by a company, is called as deposit. Any receipt of money that the company gives, it is considered to be a deposit. Certain exclusions have been given. Certain exclusions have been given in the deposit rules. So when you read the deposits rules, rule 2C, okay, and 2D, you will see the definition and the exclusion given. Clear till here? Yes sir, done. Now again moving forward to, now this is also important just for the purpose of free reserves. It's not a chapter, but the concept is very important because they ask sums on it. What do they ask? Sums. So many times in your, with respect to section of 186, loans and investments, they come how much loan can be taken, given, all this has been done, okay. So how much loan can be given? So that they say it will be 60% of paid up capital plus free reserves. So the free reserve, what all is included, what all is excluded. So if I ask you this concept, obviously when you do the sum, that time you will be looking into the definition of free reserves. But before we start, logically, what do you mean by a free reserve? A free reserve means it is built out of genuine profits. Okay? Means, and they are available for distribution as dividend. Okay? So free reserves means any reserves which are available for distribution of dividend. Okay? But does not include. So what all it does not include? Now they will give you what it does not include. Sir, what it doesn't include? So anything which we have not realized or fictitious gains are to be excluded. Notional gains are to be, hypothetical, imaginary gains are to be excluded. Common sense, that doesn't come in free reserves because you can't distribute something that you have not got. So any amount which is unrealized, notional, okay, we have simply revalued the asset, no real money has been gained. Okay. Any change of carrying amount. Okay, so any change in the carrying amount. So only the change in the carrying amount, it's not a realized gain. So all this will be excluded. Then obviously another important, this I think everybody should know and quote in your examination. I will be literally surprised if you being my student have not quoted section 2 subsection 51 and come. Anywhere in your company law paper write that the all the compliance is required to be adhered by the KMPs given under section 2 subsection 51. Mention it that the compliance, if there is a non-compliance, the KMPs will be held liable. Section 2 subsection 51, and in that you will see the definition, the includes a company site. Very, very good. Clear? Then manager, managing director, section 2 subsection 53, 54, very simple. Member. Now if you go to see your member, there is a section that you have to remember. Now who is a member? There is a chapter, entire chapter is based, and the entire chapter gets over if you understand the meaning of the term member, how you become a member and how you cease to be a member. That is it. Very simple. The very reverse will be the true. So who is a member? How do you become a member? Either I have subscribed to the MOA, or I have given in writing in the IPO form, okay, or maybe I am mentioned online shares, I have bought depository. So these are the modes of becoming members. So how many modes did I tell you? 3 modes. 3 modes will be written here. Subscribers to the MOA, if you have agreed in writing, or your name is mentioned in the depository. So beautifully explained. Beautifully. Now in writing there are multiple points. In writing I can tell that I have where there is a transfer or transmission. Transmission. Okay, so even if someone there is a nominee, he's applied in writing to get the shares in his name. So all this will come. Simple. So this is the modes of acquiring membership. This is also called how do you become a member, or modes of acquiring membership. Very, very simple. Normally a member and a shareholder is the same, but only due to procedural gap, member and shareholder might not be same. Sir, can you explain? See, normally if you have a member, that means you must be holding shares. You must be a shareholder also. And if you are a shareholder, means you are a member. This is in the general rule is true. But let's take an example of, you must have done something called as a reconciliation statement. Just for some time gap, there is a difference. For example, I have sold the shares. I have immediately sold the shares. So I am no longer a shareholder, but till my name is mentioned in register of members, I am a member. Similarly, I have just purchased, just sold. So I have just purchased or sold. That is the time when there you will see a difference. So if I have just purchased, I become a shareholder, but till my name is not entered in the register of members, I am no longer a member. So it will soon match it. It will soon be in alignment. Okay. Reconciliation should always be there after the time gap is over. Then prospectus, very, very important. What is a prospectus? Section 2, subsection 70. So what do you mean a prospectus? I will ask you. And in the prospectus, they mention two other important prospectus. What do you mean by the term prospectus? Many students don't know the concept. So prospectus is basically a invitation to public to subscribe to the securities. So what words I have used? Invitation to public. So it is a document where you make a invitation, okay, to the public to subscribe to the shares. And there are two kinds of prospectus that they have mentioned here. What are the two kinds of prospectus? Which is given under section 31 and under section 32. This talks about red herring prospectus and this talks about a shelf prospectus. So what is a shelf prospectus? A shelf prospectus is basically a prospectus for multiple issues. So basically, if a company is planning multiple issues in a year, so every time filing the prospectus with the ROC is a very big process. So I will file a shelf prospectus with the ROC will know that this guy is filed a shelf prospectus, means he will make multiple issues in that year and I just have to refer the prospectus on the shelf. So again, approval of prospectus need not be filed, but a special document called as an information memorandum has to be filed whenever you are going. So if a company has gone three times they'll file an information memorandum, telling them that when all they have gone, just keeping the ROC updated. My question to you is, information memorandum is given under which section? Information memorandum is given under which form? It will be a PAS, Prospectus and Allotment of Securities. Under which form number? So let's see PAS 2. So we have the form numbers also. We'll just go to PAS 2. So information memorandum is given in your PAS 2. Concept clear? Yes or no? Sir, beautifully explained. And red herring prospectus. What is a red herring prospectus? A red herring prospectus is a prospectus issued in book building process, in book building process. In such a process, the price or the quantum is not mentioned. So in such a thing, the price or what else? I told you, quantum of securities issued is not given. Instead, a price band has been given and people will bid on that band on basis of the it's a price discovery process. Once the price has been decided on basis of the market demand, so how much the bidding comes and we come to know that this is the final price, then a final prospectus is. Concept clear? Yes or no? Yes sir, beautifully explained, nicely understood. Now so many times there will be types of companies, so you need to know at least 3 type of companies. They are section numbers. Okay, I'm not forcing you to know many section numbers, but at least some of them. So let's see, how many do you remember? So what is a section for? Now I want the section number. You see this chapter, registered companies. Okay, registered companies. So which all companies should you know? Obviously OPC, private, public, you need to know. So section 2 subsection 62 is OPC. Section 2 subsection 68 is private company. Section 2 subsection 71 is public company. Right? So foreign company, if I have to see foreign company, then I can say section 2 subsection 42 is foreign company, and one government company also you can remember. In addition to that, section 2 subsection 45 is government company. At least these are the most important, at least these many you can remember. Okay, so if I show you, let's learn and finish it off. And one, so I have already told you that you need to know. Okay, one I have already told you that you need to know. And what is that? Section 2 subsection 6 is about associate. So these types of companies you need to know. So let's see. We are doing the section 2 part. Okay, section 2. So I told you, now come on, tell me section 2 subsection 62, what is it about? See, 45 is government company. 62, when we come to section 2 subsection 62, 1% company. 68 is what? Private company. 71 is what? Public company. Foreign company also I told you, 42, right? 42. Is the concept perfectly clear? All these sections have to be loaded onto your answer papers. Okay, I'm teaching you all these things which directly and confirmed you can write in your examination, and then exemption is guaranteed. Concept clear? Yes or no? Then again, one more company I forgot, okay, which we can also mention, is a small company. Is a small company. So in types of company, we'll also write section 2 subsection 85, which is about a small company. In small company, what is the threshold? What is the threshold for small company? So a small company is a private company. 4 and 40. What do you will remember? 4 and 40. What is the threshold? So small company means very important. 4 crores and 40 crores. Paid up capital is not exceeding 4 crores or turnover is not exceeding 40 crores. So 4 and 40 you need to remember. And very, very important, in small company you have to remember that the following are not small company. Nothing in this section shall apply to. Very, very important, they've asked in the past exam question. That, and here one more company you can remember. So these are multiple, okay. So section 8 company also you can remember. Not for profit. Not for profit company. So beautifully understood everything, okay. You can write, and even dormant company is already done. Section 455, right? Very, very good. So this is your dormant company also. Now, so the following is not a small company. So any company which is a holding subsidiary, so obviously there is a group company, so they are pretty big. Section 8 company cannot be considered to be a small company, and any company is passed under a special act. For example, your ICSI, ICAI, IC or WA, they are all formed by a special act. LIC. All these cannot be considered to be a small company. So beautifully explained. Now going to your second part. Now we are going to the other part of the chapter. So I have finished all the definition and the important definition, and I expect you all to write these in your examination. Please note down everything, and these are that you will fill in your examination. Clear till here? Perfect. Perfect. You write this, and I guarantee you, and start your answer with as per section 2 subsection 13 of the Companies Act defines the books of accounts. Section 2 subsection 16 defines the definition of charges. Section 2 subsection 30 defines debentures. Section 2 subsection 31 defines deposits. That's when the examiner will know that this is the guy who I have to give exemption. Moving forward, we are starting about the chapter called as incorporation. Now in incorporation, understand what all is there. One is section 3, that any one can come form a. I'll take you through the entire sections in depth also. Okay. Now first is section 3 onwards. Now see, till 1, 3 till all the important sections are there. Let's do it. 3 and 4 your 4 and 5 I told you, okay. So I'll just make you learn, and then I'll take you through all the sections also. So pay attention, okay. Formation of company. Section 3 says that three classes of companies will be there. How many classes of company? One can be a OPC, private and public. All the company types will fall in any of these categories only, and these categories could be either limited or they could have unlimited liability. Unlimited liability. Limited further could be limited by shares or limited by guarantee. Understood, sir? Perfectly. This we are doing from childhood. Now we come to section number 4, which talks about MOA, and section number 5, which talks about AOA. But in section 5, there is one more point which I want to bring your attention, which they ask in the examination, is called the entrenchment provision. Section 5, subsection 3. What is it? Section 5, subsection 3 talks about an entrenchment provision. Sir, what is an entrenchment provision? A very simple point, that any provision, okay, which requires more stringent approvals than a special resolution is called as a entrenchment provision. For example, if I say company would be take a loan, company can take a loan only after 100% consent. So this is more stringent than a special resolution. A special resolution requires 75%. Or if an investor has come, investor has said that listen, if you end the company wants to be sold to another company or take over, then 100% consent is required. So then 100% movement you add, it becomes an entrenchment provision. Just the mean concept. Entrenchment provisions can be done after amending the articles. That is why it is under this 5. Okay. Now, then comes alteration of MOA is under section 13. I just told you, and alteration of AO is under 14. So 4 goes with 13 and 5 goes with your 4. Sir, beautifully understood. Let's move ahead. Okay. I'm going to take you through the important points. Now, incorporation of a company. Today, if you want to incorporate a company, what would you do? So first you would go and reserve the name. Name is very important, because only once the name is available, then it can be given to you, and then you will file INC 32, 33, 34, 35. Sir, what? So in order to incorporate a company today, what all requirement is there? One is INC 32, that is called as a Spice Plus form. 33 is EAOA, EMOA and Agile plus Agile Pro form. So you have your Spice plus form, simplified performer for incorporation of companies electronically. 33 talks about a EMOA, 34 form number EAOA, and this is your Agile Pro. Okay, all this I will tell you when I'm coming. Okay, first we start with section number 4. Now section 4 subsection. Now from all this, section 4 is very important, because the provision with respect to name clause is also mentioned. I'll come to it. Now we are doing section 4 subsection 1 subclause A, B, C, D, E. What all is there? Which all clauses are there in the MOA? Now this is there. We always do. The MOA is the most basic document. It is a document which is for the outsiders. So the outsiders will know what is your name, where is your registered office, what work do you do, object clause, liability clause, right? Liability, whether limited or unlimited, capital, you're starting with what capital amount, who are your nominees. So these are the different nominee will come in case of 1% company. So these are all the forms. Now section 4 subsection 1 speaks about the various clauses in a MOA. Sir, why are you teaching me such basic stuff? Because I expect you to quote these sections in the examination. The entire paper should be loaded with authentic references. Now section 4 subsection 2. Now obviously all you can't remember, I'll tell you that if how much ever you can remember, at least whichever I've written at the start of the module, starting page, that you have to remember. The name, okay, whichever name I'm keeping, okay, I go and reserve my name on the MCA V3 portal. When I go to reserve the name, I have to ensure that it is not identical or resembling to each other, and it should not constitute an offense and should not be undesirable. So, a name should not be identical. Identical means exactly same. I want to keep my company's name Reliance Industries. What nonsense, it's exactly there. Or I will say Reliance Industries. So again, everything very resembling, that also should not be done, should not constitute an offense. If I'm keeping something with let's say Trump Murdabar Private Limited, so then they're saying what nonsense, you cannot have anything which is constituting an offense which is against public policy or which is undesirable. Okay, next, subsection 3, 4 subsection 3. Can I have a affiliation with the government? My name should have affiliation with India, Bharat. Can I do that? Answer is yes. It cannot be registered unless approval is given. So a company shall not be registered. So we have Indian Oil, we have Bharat Gas. So company shall not be registered with the name that suggests a connection with the government or contains any expressly prohibited words. Now, which are prohibited words are given in Rule 8, 8A, 8B. Okay, you can just mention that prohibited when I'm using the word president, governor, any of those things, offices which are there of the government, judge, anything. So the words prescribed which are prohibited are given in Rule 8, 8A and 8B. Unless prior approval of the central government is given. So for example, they've also said that which is just a plural of the word. For example, we have Tata. Tata is a company we know. Now I say I'm just want to keep Tatas. I'm just adding one S. So that is also considered to be disallowed. The name you have to go and apply for reservation if you want before filling in the INC 32 also you can go and register, or you can also register in way in advance just by paying the registration fee for the name, and it will be registered. Name will be preserved for 20 days from the date of approval. So how many days the name will be preserved? 20 days. So now then comes the form of MOA. Now it depends. Remember this thing that schedule 1 you will always write. Now I am teaching you one more thing where MOA and AOA will get over. Now MOA and AOA format for MOA and AOA, this is given in your schedule 1 and this is given in your schedule 1, but this is given from table A to E and this is from table F onwards. Concept clear? Yes or no? A to E. A to E. So these also we can quote in the examination. Clear? Moving forward, then we finished. So how many subsections were there? 6 subsections. All the 6 subsections we have done. Now we are looking at section 5. 5, I told you in section 5 is the articles, but which section number they ask in the examination? Articles are the rules, regulations, bylaws of the company. It is an internal document for the officers, employees of the company. What we are concerned with is section 3, subsection 3 to 5. So we are looking at section 5, subsection 3, subsection 4 and subsection 5. Concept clear? It talks about entrenchment provision. What does it talk about? Entrenchment provision. Sir, what is the entrenchment provision? Any provision which has a more stricter conditions than a special resolution is considered to be a entrenchment provision. So like telling 100% voting right. So can entrenchment provision be included? So can I bring in a entrenchment provision 100%? And the answer is yes. If it is at the time of incorporation, you can insert it at the time of incorporation only. So when I'm forming the company, that time only I will say that a company cannot be taken over or sold without consent of everyone. That is at the time of incorporation. But most of them could be later on when the company maybe Tata wants to have an entrenchment clause today. So what will they do? For private companies, they require consent of all the members, and for public company, they require special resolution. So this is important. Is the concept clear? Yes or no? Now, once a entrenchment provision has been entered, they have to inform the ROC within a period of 30 days. Okay, and obviously it will be in MGT 14 when special resolution is taken for public company. I told you articles is also given in schedule 1, but it is from table F onwards, table F till table J. J for my surname. Okay. Now coming to section number 6. Now what are we doing? We're doing section number 6. What is section number 6? Let's see. Now section 6 talks about act to override the MOA. Now this concept you understand, I believe everybody will be knowing that AOA, when I put here AOA, MOA is greater than the AOA, and greater than the MOA is the act. So if any provision is given which is against the act in the MOA AOA, then the act will override the MOA AOA, where the MOA AOA will be void. So no agreement, no contract, no arrangement, no clause can be there in the MOA AOA which goes against the act. So the act is greater than both MOA and AOA. Common sense. If there is a conflict, the act will prevail. When I have to take the MOA, then MOA is greater than the AOA. If there is any clause which is conflicting between the MOA and AOA, then the MOA will prevail. This is given in your section number. Very simple. Now we come to section number 7. Now section 7 is the incorporation section. It talks, what does it talk about? Pay attention. Process of incorporation. Now very simple, you don't need to go subsection wise. I'll teach you very simple. And company gets a certificate of incorporation, CN number are issued, it has to be preserved at the registered office until dissolution. Now let's see the process I've explained. So these are the forms you have to see. I've already explained and I believe you have become a master of it. Sir, please can you tell me again which are the forms? So INC 32, 33, 34, 35. Done. Finish. And DIN number needs to be taken because the directors have to have a DIN number to sign. DSC needs to be, so before this also you need a DSC and DIN numbers. Okay. So DSC is there because all the professionals will sign the particular e-forms, right? All these are e-forms. The physical form filing is been discontinued. So all the forms will be authenticated through a digital signature. So you need to obtain that. Then INC 32 is basically a SPICE form. With that you attach the AOA, MOA and Agile Pro. So what is Agile Pro? Agile Pro is a new form in INC 35 where GST registration, because what they have started, it's integrated the other ministries also. See, can you tell me that your company law comes under which ministry? Comes under MCA, Ministry of Corporate Affairs. Now, taxation comes under which ministry? So, Ministry of Finance. And labor laws. Labor laws comes under Ministry of Labor Laws and Ministry of Labor Laws. Okay. Labor and Employment. Okay. So, all this have been merged. All these ministry has been merged. So, for GST, Ministry of Finance, your Provident Fund, ESIC, etc. can professional tax, all this can be taken here. Concept clear? Yes or no? And for your INC 22 is your location if it is not given in the SPICE Plus form. But I'll teach you when I'm coming to INC forms also. Now coming to a Section 8 company. Now Section 8 is also a very interesting question. I believe everybody will know that Section 8 company is a not-for-profit company. Central government gives the license if you have the object to promote any science, commerce, arts, or any welfare activities. This they are, two things they are not allowed. They are not allowed to distribute dividend, obviously, because all the profits, if they have made any, okay, cannot be distributed to the members. It has to be reapplied for promoting the objects. For example, being human, it's a brand of Salman Khan, which is an NGO where they sell the shirts. They can sell it at profit, earn that profit, but that profit cannot be distributed among the shareholders. It has to be reapplied to promote the objects. So central government gives the license, objects should be to promote, and they are prohibited from distributing dividend. But one interesting thing is there for Section 8 company, which I don't think many people know, that a Section 8 company, a firm can be a member of Section 8. Please note it down. Please note it down. Okay. A firm, partnership firm, can become a member of a Section 8 company. Normally, a firm doesn't have separate legal existence. Okay, this is very new. A firm may be a member of a Section 8 company. And one more important interesting point, which I don't think it will just click to you, for Section 8 company, is in a Section 8 company, proxy need to be a member. Okay, so these are three important points that you need to know for Section 8. And if you want to revoke, obviously central government gives you the license, so they can only revoke it. Now let's go into the other important section. Now my question to you is Section 10, commencement of business. You have to remember the rule number as well as the form number. Okay, what is the form number? 20A is 20A. Concept clear? So today, no company, private, public, any company cannot, even after getting certificate of incorporation, cannot commence the business. This was an amendment back in 2019 that no company can commence the business by merely getting a certificate of incorporation. So certificate of incorporation is needed. After that, a declaration for commencement is needed. Under which form number? A declaration by the directors in form 20A. So very, very important. So form 20A declaration needs to be given, and that too within 180 days, okay, of incorporation, that the subscribers have paid the entire money which is there, and they have a registered office under INC 22. Clear till here? And this is given under your rule 23A of Incorporation Rules 2014. So beautifully understood, nothing more that you need to remember, and this has to be given within 180 days. I think I've covered that also. Yeah, within 180 days of incorporation. So every company within 180 days of incorporation need to give a declaration by the directors that the subscribers have taken up the shares and the registered office is verified. Very good section. And then we come to section number 12, which talks about registered office and how to shift the registered office. Now, do you know that in your alteration, now pay attention, I'm going to teach you something which your entire major chunk of your chapter of alteration of MOA will get over. So, you know this chapter that you have, your MOA, in that there is alteration. I'm going to teach you something where your most important part will get over. So be with me. That is your registered office alteration. Comes in the exam, okay? Now registered office is, remember, that is in INC 22. INC 22. Every company shall within 30 days from its incorporation and all times thereafter have a registered office capable of receiving an acknowledgement all communication notices addressed to it. Now pay attention, okay? I'm going to teach you something really, really cool. Market is important. This is what is important to know. Okay. Now all these form numbers INC 22 to 28 you need to know. INC 22 to 28 you need to know for your alteration of MOA AOA chapter. So all these points will come in what? Alteration of MOA and AOA chapter. Now this is obviously alteration of MOA only that we are talking about chapter. I'm going to teach you one way whether you learn the entire section. INC 22, 23, 24, 25, 26, 28. All you need to know, and you go and see all these are hit. Now first thing is INC 22. It is the most basic form that whenever there is a change or you have had a registered office, it will be in INC 22. If you are shifting the registered office, okay, shift of registered office from one state to another or from one RD to another, then you will apply in INC 23. So this is a consent of RD or CG if you are shifting from one state to another. Then this is for name change. Now these two are name change. Now when you alter your name, you can also alter the name, alter the MOA, you can also alter the name. So while if anyone wants to alter the name, okay, they require approval of CG. So in INC 24, there will be approval of CG, and pursuant to name change, a certificate of incorporation will be issued in INC 25. Now I'm going to teach you everything and then I'm going to write it down also and show you that it's very simple to learn. Then whenever the company has changed the objects, a newspaper advertisement is in, whenever they say newspaper advertisement, it will be in INC 26. INC 27 is change conversion of private to public, and this is whenever any order is received, you have to inform the ROC. Order of central government or NCLT, you have to inform ROC. And INC 27. So just be with me. I'm going to teach you this where you will know everything by heart. INC 27 is when a private company wants to convert into a public company, or a public company wants to convert into a private company. Now always remember, conversion of one form to another is given in section number 18. Is conversion of business structure from private to public, public to private, OPC, etc. There is a separate chapter. I don't know whether it's your conversion of company. So that section 18 you need to remember. It is about conversion of one form to another. Okay. Coming back, sir, you told you make us learn. Yes, don't worry, I'll make you learn all the forms. Now, before we go, this is very, very, very important. Okay, mark it as supremely important for MOA AOA chapter. If you don't have this for MOA AOA chapter, MOA AOA will be very, very difficult to learn. And INC 22 to 28, I'll be making you learn right now only. Give me 5 minutes and that will be on tip of your tongue, and your chapter MOA AOA will get over. So this is very important. Sir, how I can get all this? Obviously, we've made these notes over a period of many years. Okay, so you just have to take a screenshot. If it is not there, write it down. Okay. Now, alteration of MOA. If someone will come, sir, I want to alter the MOA. Before I start, I would know the section numbers. That's section 4 and section number 13. Right? Section 4 and section 13. Name clause, what are the requirements? Very simple. I just told you, if 24 and 25. For a name change, obviously special resolution is taken and you have to take approval of CG. So special resolution plus CG approval needed. CG approval is in 24. Once they have given, then your new certificate of incorporation with a new name will be issued on INC 25. If it is a rectification of name, not a name change but a error or someone had complained and you're changing, so it will be not through special resolution but through ordinary resolution. Sir, again can you repeat? In all cases when you're changing your name, it will be a special resolution, but if you're rectifying your name because your name turned out to be similar to any other company or someone complained to central government, then you just require ordinary resolution. Now this also is very important. Regulation number 2045 and 46. If it is a listed company, then name change cannot be done. Certain criteria has been given, that also you need to know, and name change provisions are over. Now registered office, your registered office clause. Now registered office, I will write it is under section 12. And how far are you moving out from your original location? The compliance will change accordingly. It just keeps on increasing if you keep going further. So if I'm just going from one area, one lane to another within the local limits, and board resolution plus INC 22. Now these two will be there in everything. So as you go ahead, only one thing will be added. Now I change my local limits, but I'm still within the same ROC limit. So maybe if I'm in the same city, I'm moving out a little far from my pin code is changing, but the ROC is still the same ROC. Then board resolution is there, special resolution, and only special resolution will come in now. Now special resolution. This is the new thing that will be added. Now I'm going further. My ROC is same, jurisdiction from one ROC to another ROC, but within the same state. So I am going from Mumbai to Pune. Now I am still in Maharashtra only. But the ROC from Mumbai is different, from Pune it is different. So I am within the same state, but from ROC of one to another. So all this board resolution will be there, INC 22 will be there, and special resolution. All the previous three things will be there. And additionally new point will come. So these three will be there, and additionally new point will come, that is INC 23 has to be taken, which is RT approval. Right? INC 23 is RT or central government approval is always in INC 23. And a declaration needs to be taken that no default in employment dues and creditors NOC is also needed. Very important to know. Declaration by KMPs and a creditor's NOC. If I am going from one state to another state, now this is the most important, and this they ask in the exam. This is the highest level compliance, so all the earlier things will always come. Board resolution, special resolution, INC 22, INC 23, CG approval is the same form. There the RT approval was there in INC 23. Here the CG approval is there. Public notice will be given, and the order of central government where the consent has to be given to ROC, and NOC will be there. Clear till here? Yes. Then if the object clause is changing, then you just require special resolution and exit opportunity. Dissenting shareholders are to be given exit opportunity. Rest all is simple. Alteration of AOA is very simple. Section number 5 read with section 14, and just a special resolution needs to be taken. Now I told you I'll make you all memorize the form numbers. Okay. Now the form numbers will only come when you write INC 22, INC 23, 24, 25, 26, 27, 28. Chalo. I had promised you all I'll make you all learn the INC forms. Okay, because this is important, right? So first is for conversion. So if you go to section number 18, if you want to convert yourself from private to public or public to private, conversion, then it is, so this is about conversion of company from one entity to another. Simple. Now let's start. This is about registered office phase. These two, 23 and 24, was for what? It was all connected, not 23, 24. No. 24 and 25 were connected. This was about related to name change. So in name change, what do you require? CG approval, and then you get a certificate incorporation on name change. On name change. Simple. INC 23 was a dual form where you get CG or RD approval whenever you shifted from one state to another. INC 26 was a public notice format. Whenever they tell you that public advertisement needs to be given, the format is given INC 26. And 28 is basically CG order or order of any authority that you have to send to ROC. Is it clear? Yes or no, everyone? Yes or no? This is very, very important. I've taught you a difficult thing. Now, believe we've covered all the important things from this part that is needed. Okay. Now, rectification of name. Now, what was rectification of name? Pay attention. That if the central government finds that a company's name is identical or very resembling to another company, it may direct the company to change its name. So you will rectify your name by taking ordinary resolution. Okay, or if a registered trademark owner within 3 years of incorporation, okay, finds, then he can apply to the central government to change the name. In both the cases, when the central government gives an order, direction, you have to change it within 3 months from receiving the direction by central government. Once the central government finds that your name is very resembling to another or is identical, then direction will be given by CG to the company to change its name, and that has to be changed within 3 months. Sir, what if I don't change within 3 months? Then if the company fails to comply with the directions issued, then the new name will be given. The central government will allot a new name called as ORDNC, Order of Regional Director Not Compliant. So this becomes your name. Okay, so your name will be ORDNC. If you didn't comply within, how much time limit they had given you? So you have to comply within 3 months. Okay, 3 months is the figure. So within 3 months of receiving the direction, you have to change your name, else central government will give you a new name. Conversion of company from one form to another is section 18, and then we are done. Perfect. Now we'll go to the next part. So we completed all this. Now we are going to the next part, which is prospectus and allotment of security. Now in this, all the INC forms which were important, I have taught you INC 22 to 28. Now I will teach you all the pass forms. Very, very important, the pass forms. Now this all comes in the share capital chapter. So here you have PAS 1, 2, 3, 4, 5 and now 6 also. PAS 6 also. So they are 5 only, not 6, 5. Let's see, very simple. You don't need to learn everything. I'm going to tell you only which is important. Yeah. See, pass forms. I want you to note it down and then we are done. Whenever the company is changing the objects, whenever the company is changing the objects, okay, for which the prospectus was issued, then advertisement needs to be made in the newspapers informing that we are changing the name. So PAS 1. So variation in the terms of the prospectus. So if at all you have varied the terms of the prospectus and are changing the object clause, then you need to give an exit opportunity. That is, all the dissenting shareholders should have been paid. Special resolution needs to be taken, and a advertisement, so that a special resolution and pass 1 form is filed. So objects changed. Public notice. or advertisement on objects are being changed. Then we come to PAS2. Now PAS2 had already taught you it was information memorandum whenever you're filing a shelf prospectus under section 31. Under section 31, that a shelf prospectus is a prospectus for multiple issues. So in the year the company, so 1 year validity period is there. From the first issue, you can keep making multiple issues within a period of 1 year, but every time you make a issue, information memorandum has to be filed. So information memorandum is an intimation. Normally, if that would not be the case, then every time you have to take approval separately for the prospect. Now PAS3, very important, is the return of allotment, or whenever you allotted any kind of securities, return of allotment is a common form. Now when you come to section 42, now section 42 we'll do very important, that is private placement. What is it? Private placement. When I privately placed to someone, I will give a offer, so prospectus will not be there. A private placement application letter will be given. So when I'm giving it to a selected individual, then I'll give them a private placement offer letter or application letter. Okay, and a register of that, register of private placements is maintained in PS5, record of the private placement offer. So all these two are with respect to section 42. So again, if we take a recap, PAS1. What is PAS1 for? Whenever you change the object clause. What is PAS2? Whenever information memorandum is filed pursuant to section 31, that is shelf prospectus. Return of allotment. So whenever you issued any kind of securities, return of allotment and details of allotment is filed in PAS3. And whenever you see any kind of allotment made, preference issue, equity shares, private placement, public issue, any kind of issue made, details of the allotment is made in PAS3. Private placement is covered here. From here, all of us, we know that the most important section in your entire this is your section 42. Now we'll go to your section 42 and cover it as well. Okay. Now we're going to section number 42. Now we are completing your section 42 also. Till now, let me know if everything is clear or no. In one go, I'm teaching you everything, okay? Okay, clear? Yes or no? So now we are going to do section number 42 in depth. Okay, section 42 we'll be doing in depth because it's a repeatedly asked questions, forever they keep asking. Okay, so let's start. Now we are starting section number 42. Now what do you mean by section 42? And this is most important, okay? So I want you all to pay attention as well. That section 42 talks about private placement. It is read with rule 14 of the PAS rules 2000. So section 42 read with rule 14. Read with rule 14. Now what is a private placement? When you allot to a selected group of persons where company knows in advance to whom they are allotting, it is called as private placement and it cannot be a public offer. Now first subsection 1, we will be doing subsection wise. So section 41, 42 subsection 1. A company may make a private placement of securities. Subsection 2, the limit on the offerees, to how many people you can issue at a time. So now pay attention, okay? That a private placement shall only be made to a selected group of person identified by the shareholders called as identified person. The company would already know. So Reliance, when they allotted to Mark Zuckerberg, they already know that they are allotting to him, no other person can accept it. And the number of persons should not exceed 50 in a financial year, or such number, a higher number as may be prescribed. So they say in the act 50, but they also say that a higher number can be prescribed. So the higher number is prescribed in rule number 14 sub rule 2. So the number has been prescribed at 200, that is they are saying in an aggregate year, excluding QIBs and allotment to employees under ESOP. So if a company makes an invitation to more than 200 persons in a financial year, shall be deemed to be a public offer, and public offer rules need to be followed. So again, if I repeat, a private placement can only be made to a selected number of persons, and that number shall not exceed 200 in a financial year. So max 200 in a financial year, and it excludes QIBs and employees. So apart from them, I can not issue more than 200 to the people. Now subsection 3. Now which are the form numbers we've given? That a application form will be given. That application or the offer form will be given in PAS 3. Will be given in PAS 3. Sorry, PAS 4. Okay, PAS 4 is the offer letter. Return of allotment is in PAS 3. And they shall not carry any right of renunciation. Means if I'm offering it to you, then you cannot renunciate in someone else's name. Okay, obviously it cannot give it to someone else. Now PAS 4 should be serially numbered and all the details. PAS 4 should be serially numbered, specifically mention the offeree. It should be either in writing or in electronic mode within 30 days of recording the person's name. The only person to whom his address can apply, and any application made otherwise will be treated as invalid. So in the offer letter, you have to give the name. If it is 3 people, they have serially number it, addressed to specifically to each offeree. It must be sent electronically within 30 days of recording the person's name. So once you've recorded it in the books, within 30 days you have to give it to them. A complete record will be maintained in PAS 5. Okay, and that is it. Okay, now application and the mode of payment. Every identified person shall apply for this in PAS 4, the offer letter, and the subscription money shall be paid in check, DD, or any other banking channel, but not cash. The company must maintain a record of the bank account, okay, in which they will be given. In joint holders, the bank account should be named as a first holder. Cash is not allowed. Restriction: no fresh allotment shall be made unless the allotments of an earlier offer have been completed or abandoned or withdrawn. So once a offer is going on, no other offer should be made till this is completed or abandoned. Then the allotment should be completed within 60 days from receipt of the application money. So moment the money is received, within 60 days we have to, of receipt of the application money, we have to accept their allotment. Then separate bank account should be opened. PAS 3 is to be filed. Done. Okay, with this we have completed section number 42 as well. Okay, now these were the important parts. Now we'll go further into your share and share capital. Now remember this, I'm going to teach you a section, a method where you will be easily learn. Now share capital and debenture. Now from here, see this, issuing shares at premium, at discount, sweat equity. So these are a sequence that I want you to learn. that if a company wants to issue shares at premium, then it will be section number 52. So this is issuing shares at premium. So the face value is 10. You can issue it at 12, and the 2 rupees premium will go into security premium account. And then in that security premium account, where all it can be used, that is also given. That is important. Prohibition on issues of shares at discount. So shares cannot be issued at discount. Debentures can be issued at discount, and when discount, only one exception is there, which is in section number 54, which talks about sweat equity of shares. Preference shares are issued, okay, by a special resolution in your section number 55. Section 56 talks about transfer and transmission of shares, and rectification of register of members is in 59. So these all order I want you to remember. Now your further issue of capital and bonus shares is given here. Further right issue, ESOPs and preferential allotment is given in section 62. Talks about right issue, ESOPs and preferential allotment. Reduction of share capital, okay, reduction of share capital is covered under section 66, very important, and section 68 to 70 is about buyback. So once you learn the sections, obviously internal provisions you would be knowing, it's easier to close it there, okay. 68 is about rules and what are the requirements of buyback of shares. In that, threshold is important. How much buyback the board can do, how much the company can do. So board of directors can do a maximum buyback of 10% of the paid up equity share capital, paid up equity capital of the company plus free reserves, and company can do 25% of the paid up capital plus free reserves. So that threshold is there, just you can read it. The amount that you done buyback has equivalent amount has to be transferred in capital redemption account, and prohibition on buyback is covered under section 70, 68, 69, 70. Rules, the conditions for buyback is given under section 68. 69 talks about transfer to CRR, and 70 talks about prohibition of buyback. Now very important section is section 71, that debenture rules have been given. Now we go to see here your range, deposits chapter. So section 76 to section 76A is given. 76 is what? When you want to you cannot, prohibition on acceptance of deposits from public. Company cannot accept a deposit from public. They've given you certain rules that normally you can raise from members, not from public. Public, there is section 76, acceptance of deposits from public is given here. Now that only eligible company, okay, it is only eligible companies, okay, who can do only so here only eligible company. Now it is given rule 2E, who is a eligible company. So these are basically public company when they meet the net worth requirement and turnover requirement. So only they can go and raise from public. Rest all, nobody can raise money, prohibited from raising money from public. They can raise from members. If any debentures deposits were issued with the intent to defraud, then the person in charge will be personally held liable. Very simple. 76 to 76. Here when we do registration, 77 to 87, in that you have to remember section 77 is the most important. Duty to register the charge within 30 days, and then you have the charge forms. If the charge holder is not registering, if the company is not registering, then the charge holder can register in 78 by the bank creditor, they will go and do. And 82 is about satisfaction of charge, when the charge has been completely paid off, loan has been completely paid off. Then we have the meetings chapter. Now remember, meetings, directors, I will cover it in depth, or you can study it from the dream batch, because every section is important here. I have covered every single section in this. Okay, the important sections I have written, at least which all you need to know. Meetings and directors, all sections you need to know. I have covered that. Here I am doing the other chapters. Then comes dividend, declaration of dividend, then unpaid dividend account, then it goes to IPF. So ideally a dividend should go within 30 days, should be paid. If a dividend is unpaid or unclaimed for for 30 days and 7, then in the next time it will be transferred to the unpaid dividend account. The names of whose name has gone in the unpaid dividend account within 90 days is to go on the company's website, and if for 7 years if no one has claimed, then it will go to IPF, a fund created by the central government. Now remember, if for 7 years you not claim the dividend, that dividend amount will go into IPF. If for 7 years you not claimed any dividend, then even the shares, and even none of the 7 years you ever claimed, then even the shares will get freezed and be transferred to IPF. Now if you want to remove it, then they will made a IPF authority has been made, and you have to know the forms for claiming your money back. So imagine if after 7 years I have come, I can still claim. There is a form to go, IPF form 5, and all those forms are there. Whenever company is transferring the form, that also is important. The IPF forms are also important. Accounts forms is given for accounts chapter, section 128 to 138. Auditors is from 139 to 148. Directors, obviously you need to know all the important section, all the sections you need to know for directors. Compromise and arrangement is section 230 to 240, but you can't remember all, so at least you can remember the main. Normal merger is covered under 232. Fast track merger, so this is a short form merger or called as a faster than normal merger process. Normal or NCLT route is a normal merger process, is covered under section 232. If I am talking 233, it is talking of fast track mergers. Okay, in 233. 234 talks about with a foreign company. So they call it as cross-border mergers. Cross-border mergers. So what is a cross-border merger? Where at least one company is a non-resident company or a foreign company, and for this you require additionally RBI approval, and all the other process of normal also has to be followed, but only one additional process will come in, that RBI approval also to be taken. Okay. 271 also I told you was important, which is winding up and the compulsory grounds for winding up. So there are, when a company can be wound up mandatorily, that has been given. Now SS form. Now I have finished all the sections of company law which you need to know, and you've written it down also. So all that you memorize is good enough. Now I'm saying you don't have to stop at sections. You also have to quote the secretarial standards. You will also quote secretarial standards. Okay. Now pay attention. SS1 is about board meetings. SS2 is about general meetings. And SS3 is about dividend. So these three standards I want you to quote it in your examination. And as per law, section 118, subsection 10, it is mandatory to follow SS1 and SS2. The secretarial standards for board meeting and secretarial standards for general meeting are compulsory to be followed. At least SS1, 2, 3 you can write. Then all the threshold limits which are there, which can come in your exam, where booming director has to be appointed, when annual return needs to be taken, all of that I have made a table. When internal auditor needs to be appointed, all those you can read it from the exemption marathon PDF. Okay, all these whichever thresholds are there, independent director when it comes, audit committee when it's to be done. So these are some numbers where I put all of them in one order, so it's easy for you to learn. Okay, all this is important. Even SEBI LODR provision that you need to know, that also I've covered. Then coming to one important thing is about drafting. Now pay attention to this, drafting. Now drafting, I have a separate video also, but I'll just tell you in short in the exemption marathon because it's very important. So notice of meeting. For example, if a company wants to call a meeting, so how will the notice be filed? So if you go to look at this, this is the letterhead of the company. It is the letterhead of company. Name of company, registered office, SIN number, email ID, website. Then you will say notice is hereby given for the AGM, EGM of the members of XYZ Limited held on so and so date, to be held on so and so date. Ordinary business, whichever is the ADDA, ADDA. So there are only 4 ordinary business for which explanatory statement is not needed. So they will write that there are 4 ordinary statements. Auditors, DD, your dividend, directors, and one more is for auditors and accounts. Yeah. So if you go to see auditors, directors, dividend, and adoption of financial statement, that is account. So these are ordinary business for which you don't have to give explanatory statement. Everything else is treated as a special business. So what all agenda is there in the notice, that notice is hereby called on so and so date for so and so at so and so place, and the agenda will be as follows. Ordinary business 4 you will write, and special business whichever is other than the 4 you will mention. By the order of the board, so and so, name of the company secretary and his number, place and date. Now if you go to see your resolution format, very important and repeatedly asked exam question. So this is the most important drafting question. I'm going to teach you one technique where you will be able to write any resolution that comes in the exam. Any resolution. Now 5-10 marks drafting questions they ask, and all it is covered here. Now if you go to see, one is how do you start a resolution. You will write the name of the resolution, whichever it is. For example, approval of shares, resolution for change of registered office, resolution for consolidation of shares, resolution for subdivision of shares, resolution for appointment of company secretary. So the title will come, and then you will write the words resolved at pursuant to section so and so of the Companies Act and such other provisions as may be required, the company, okay, the company be and hereby accords to, the company accords to, be and hereby decides to, just copy the title. Resolve that XYZ director or company secretary has been appointed to give effect to the aforesaid resolutions and sign as may be needed. Like resolve further that be and hereby is authorized to do all such acts, these things as may be necessary to give effect to this resolution. So this is the format that you will write. So what is the format? Write the title, then write resolve that pursuant to section XYZ and such other approvals as may be needed, the company be and hereby accords to, copy the title, whatever it is, resolve further that the board of directors has hereby appointed company secretary XYZ to do all such acts, deeds and things necessary to give effect to the aforesaid resolution. Over. Your 5 marks is in your pocket. Any title. So this is a draft format. Any resolution, you just need to change the title, and the rest all part will remain the same. Normally they ask letters also, right? Write a letter. So there's a letter will be, you will write the date. I'm giving you the letter format also. Sometimes they'll say as a company secretary, give the letter to the board of directors explaining the process to issue bonus shares. So what is the letter format? You'll write date to the board of directors, subject will be mentioned, and below the subject you'll write dear sir, madam, this is to inform you whatever, and then your thanking you, sign company secretary. Clear? Then comes all the practical questions that come. I have given you that with the solutions. Okay, so questions from whichever part comes, I have written it. You can go through the exemption marathon with the solutions. So whichever exam questions have come, as sums also come for 5 to 10 marks. All of them, whichever comes, I have covered it, so that you can do. And then all the form numbers, important form numbers which are there from INC, all these form numbers are also given. All this you will get it on our website in the free study material section. Then one important section is there, just remember section 12, 143 subsection 12. It talks about as auditors, when CA, CS, CMA identify a fraud, then if the fraud amount is up to 1 CR, then they will report it to the audit committee or board. But if it is greater than that, if it is 1 crore or above, it is greater than 1 crore, then you will report it to CG. So if a fraud is there of greater than 1 crore, then you will refer it to the central government. If it is less than that, then to the audit committee and the board. All the form numbers I have given that you need to know. Okay, then even BEN forms are important. Beneficial owner, very, very important. So a significant beneficial owner, SBO, very, very important. Section number is also important. Section number is section 90. It is about SBO. So SBO means what? Do you know the meaning of SBO? Do you know the meaning of the term SBO? So SBO is a significant beneficial owner, is an individual who is holding the shares. So it means an individual, okay, who is acting through another more persons and possess rights in the reporting company, okay, at least 10% of the voting rights, 10% of power to vote or holding the shares, 10% distributable dividends he is getting, or has any significant influence. So just remember the threshold, 10% in reporting company. So is an individual, okay. So let's understand. So what is happening if this is a company XYZ Limited? In this XYZ Limited, the shareholder is 10% holder is ABC Limited. So we want now this is a shareholder, but we require individual who is holding it. So you further go back to see that who is the controller of ABC Limited. So we come to the individual who is indirectly holding shares in the XYZ Limited, called as reporting company. Okay. So we come to know that Mr. X is ultimately holding the 11%. So XYZ is a significant beneficial owner. So what are the form numbers? These are BEN forms. Very simple. If I am holding 10% through a company in your company, then I will give a declaration. So declaration by the SBO that I am there. Okay. Then return of SBO to be filed by the company to ROC. So the SBO informs the company, company informs the ROC. So SBO informs company in BEN 1, company informs ROC in BEN 2. Register will be maintained in BEN 3, and BEN 4 is basically notice given to a person who has not yet declared, but the company believes him to be a SBO. So if someone has not made the declaration and company feels that this guy is the beneficial owner, is not declaring it, so then they can issue a notice to him that listen, under section 90 you should have declared, you are not declaring. And a failure to declare SBO, when it is there, that entire shares will be transferred to IPF. Okay, with this I have completed the entire marathon, including the sections which have to be written in the exam, in the module for each chapter. Second, all the important sections have been covered. The drafting formats I have given you. The sums I have told you is covered in the particular thing in your PDF, which is given on our free resources section. And now only meeting directors are important part, which I will also cover in the next part of the marathon. But remember one thing, all this you have access to in depth in the dream batch. The dream batch is given to all of you all to go ahead and fulfill your dream of becoming a company secretary and clearing with flying colors. So it gives me immense pleasure to conclude the marathon. But now It is your job to go ahead and perfect it. Take 1 hour more and reflect on all that I've given, and I'm sure you will be getting a exemption. So with this I conclude, and I will soon see you tomorrow for the next part of the marathon. And go ahead, enroll into the dream batch. The links have been rotated in the group. It gives you access to all the paid lectures for a price less than a pizza. So 200 300 rupees, you 300 rupees and you get the full access. And this is till your December 2025 examination. So that is it, guys. Can I have exemption in the chat box? And it is my request, do share this video with your friends, because many students are looking for lectures in English and quality lectures in English, which is not available. Second, even for students in Mumbai, I would love to meet you all. Okay, so that is it, guys. Thank you so much for your patience and sitting through the entire marathon. I hope you found value, and I'm sure you will get a very good marks. Take care, guys. Bye.